Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about News Corporation Quarterly Report. News Corporation offers a diverse range of businesses and services to consumers and businesses worldwide. At its core, the company creates and distributes authoritative content through various media channels, including newspapers, websites, mobile apps, and social media platforms under well-known brands such as The Wall Street Journal, Barron's, and MarketWatch. In addition to its news and media offerings, News Corporation also provides digital real estate services, allowing users to search for properties online. The company operates a range of property-related advertising and services on its websites and mobile applications. Furthermore, it publishes books across various genres, including fiction, nonfiction, children's, and religious titles. News Corporation also owns and operates several newspapers in the United States, Australia, and Europe, as well as digital mastheads and other websites. The company has a significant presence in the financial sector, offering services such as Dow Jones Risk and Compliance and Factiva, which provide data products and news to businesses. Additionally, it operates Storyful, a social media content agency, and sports radio networks and news channels. Overall, News Corporation's diverse portfolio of businesses and services caters to various needs and interests, making it a leading player in the global media and information services industry. Unfortunately, I am unable to provide a response as there is no text provided. Please provide the extracted summary so that I can generate a quick read overview essay on what has caused News Corp's stock price to drop in the past year. News Corporation maintains a market capitalization of $13 billion, broadly in line with the industry peer group. News Corporation trades at a higher price-to-earnings ratio of 29 times and a higher price-to-book ratio of 1.43 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth and decline are multifaceted and influenced by various factors. On one hand, revenue growth is primarily driven by circulation and subscription revenue, consumer revenue, real estate revenue, other revenue, digital estate services segment growth, publishing segment growth, higher circulation and subscription revenues at Dow Jones segment, and higher advertising revenues at Dow Jones segment. Additionally, the success of digital-only subscriptions at The Wall Street Journal and digital advertising revenues, driven by the financial services sector, have also contributed to revenue growth. On the other hand, revenue decline is primarily attributed to advertising revenue decline, news media segment decline, book publishing segment decline, and a decrease in digital book sales. These factors highlight the challenges faced by companies in adapting to changing market trends and consumer behavior. The impact of these drivers on revenue growth or decline underscores the importance of diversifying revenue streams and staying agile in response to shifting market conditions. The net income from continuing operations of News Corporation experienced a significant decline in Q3 2025, decreasing by 21% compared to the same period last year. This trend continued throughout the year, with a 14% decrease in YTD 2025. Similarly, the net income attributable to News Corporation stockholders also saw a decline, dropping by 10% and 9% respectively. A closer look at the profit margins reveals that they have undergone significant changes across various segments. The digital real estate segment witnessed an increase of 2.8%, while the book estate segment experienced a slight decrease of 0.4%. However, the publishing and news media segments saw drastic declines of 50% and 60% respectively. The primary reason behind these changes in profit margins is attributed to the reduction in operating expenses and impairment charges. This strategic move has led to an improvement in profitability for certain segments, while others continue to struggle with declining margins. The company is indeed generating positive operating cash flow. This can be seen in the net cash provided by operating activities from continuing operations, which has consistently increased over the years. In 2024, the company reported a net cash of $316 million, up from $278 million in 2023. This indicates that the company's core business is generating sufficient cash to cover its operational expenses and investments. The data on page 69 further reinforces this conclusion, showing a steady increase in net cash provided by operating activities over the years. The fact that the company has been able to generate positive operating cash flow consistently suggests that it has a solid financial foundation and is well positioned for future growth. The company's debt level has undergone significant changes over the past year. While total debt increased by $23 from $2,828 to $2,851 at one point, it decreased from $1,937 million to $1,962 million in another instance. However, News Corporation borrowings remained constant at $1,951 million for both 2024 and 2025. On the other hand, interest expenses have been relatively stable, with no change mentioned for 2025 after being $80 million in 2024. Management's comments on the company outlook and strategy suggest a period of transition and adjustment. The sale of Foxtel to DAZN Group Limited has had a significant impact on operations and financial results, indicating a strategic shift for the company. This change is likely to influence future performance, as management notes that interim results may not be indicative of future outcomes. Management is also evaluating the effects of new accounting standards on consolidated financial statements, which will require adjustments to reporting practices. Additionally, the company has reorganized its segment reporting, aggregating residual results from the subscription video services segment into the news media segment. In terms of tax obligations, management is monitoring digital services taxes in various jurisdictions and assessing their potential impact on overall tax liabilities. However, they do not expect the package to significantly affect the effective tax rate. The company's liquidity position appears stable, with expectations to meet needs for at least the next 12 months. Access to credit and capital markets will be influenced by factors such as financial performance, credit ratings, market conditions, and economic trends. Overall, management is navigating a complex landscape of changes and uncertainties, seeking to adapt and adjust strategies accordingly. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out significant amounts to its investors. For instance, in 2025, it paid out $104 million, while in 2024, it paid out $92 million. Furthermore, the company declared a semi-annual cash dividend of $0.10 per share for both Class A and B common stock. In addition to paying dividends, the company has also been actively buying back its shares. The total authorized amount for share buybacks stands at $2 billion, with a remaining authorized amount of $1.044 billion as of December 31, 2025. In 2025 alone, the company repurchased $264 million worth of shares, while in 2024 it repurchased $78 million worth of shares. These actions demonstrate the company's commitment to returning value to its shareholders through both dividend payments and share buybacks. There are concerns about inventory buildup or supply chain disruption in the company's operations. The issue is highlighted on page 3, where it is mentioned as a concern. Furthermore, on pages 56 and 63, one-time write-offs of $16 million each are noted, primarily related to inventory at HarperCollins International Operations. These write-offs suggest that the company has been struggling with excess inventory, which can lead to supply chain disruptions if not managed properly. That concludes the financial summary for News Corporation. Feel free to comment below, and I will be happy to answer them when possible.